Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your financial market update for the new trading session of Friday, believe it or not. Yep, I waited for the markets to reopen at 5 p.m. just now, Central Daylight Time. That way we can at least see what we've got going into Friday, which I think is important. The event of the day, well, you know, last night we heard about the special prosecutor to investigate the Russian situation around our president and his campaign. Then we walked into a Brazilian nightmare where Brazil's brand new president has been accused now of basically trying to bribe someone. And to make a long story short, everything went crazy on that news. The Brazilian stock market, some of them down 10 to 20% intraday, closing down sharply lower, about 6.5% lower for the real. Grain markets, sugar markets, everything priced in that fights with Brazil for exports got hit today because with the real lower, their goods get a lot lower. But as we're looking at what happened, the gold, this is about where the market was actually trading at the end of the day today. It closed at 12.52, but that's because it was 11.30. So we had another losing day, if you will, on these markets. The dollar was up. We're flat right now in a lot of the currencies. The bonds and the notes pretty stable today as they're trying to figure out what do they do about what's coming up in June with the Fed hike that still looks like it's going to go forward. And yet what happens if they raise that? They can, but what about after that? If our president were to be impeached later on, how do you raise interest rates going into that because the country would be in chaos? It's a very difficult time for a lot of markets. As we look at the stock indices, for the week, we're down 196 points in the Dow. And the market certainly looks like it's having big trouble at the 2100 area. As we take a look at the market and the down thrust on an area chart of closes, we've gone from 20,954 to 20,605, and we're up a little bit tonight, as you can see. So, you know, since that big break, we've gotten a bit of a bounce, and you see that right here as to what is going on. Interesting, yes, but this does not say that this market's anything but a bounce at this point in time. You still have formidable resistance at this 21,010 level. When I take a look at the market on swing lines, we have a clear pattern of a high with a lower high. That's the 21,010, 20,995, and lower lows. That's all bearish. I look at where the 18-day average of closes is, 20,852, and that tells me should the market get a good lift, I think the pros would be willing to sell into that number and throw out the towel if it got over the 20,995 zone. If the market were to continue lower, a potential support zone might be 20,427. Now, another thing to look at are the Bollinger Bands. Remember what I've explained. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. It can stay out of that band, rule of thumb, 5 days in a row. Each one of those days represent one of those 5 percentage points. It's a rule of thumb. I've seen 7. I've seen, in wild extreme positions, 9. But the reality of the situation is 5's the norm. Each day a point. So we have 2 of those points gone with the close yesterday and the close on Thursday. Now for Friday, the market is already fighting its battles to get over that lower band. We're at 20,650. That lower band's 20,647. That does not mean the market takes off. It just means staying near that band. The band is also, as you can see, trying to break itself down. And believe it or not, with all this, the market is still not oversold. So what do we have? We have the swing line down. That's bearish. The market is under the 18-day average of closes. That gives it a bearish bias, and momentum is still pointing down. All the market is trying to do is get to the right-hand side of the Bollinger Band as I see it. In the NASDAQ, you made a run for the Bollinger Band, couldn't quite get there. So where did the market go back to? You see it. I talk about it so often. That 18-day average it's like a safety zone. It's where markets like to look and see what they're going to do next. That's where this market is, fighting for that. And in the process, we'll find out what the next direction of the market will be. There is one common element here that you see in both of these charts. Again, traders stepped in to buy the big breaks. They didn't let the market get into a total panic situation yet. That doesn't mean it can't do that. This is the first break we've had in a long time, and so far in both of the charts that I'm showing you at this juncture here, none of them are in uptrends. All right, we have no trend at all in the NASDAQ, a downtrend in the Dow, and we have no trend at all in the S&P. We have a higher high than there and a lower low. Again, 2 days under the lower Bollinger Band, and then you come back, and if you take a look at the close of business today, you finished at 20,650, and you were just under the 2364. So that was the second day in a row closing under the Bollinger Band, and what we're doing right now is fighting to get back over it. Also, not oversold. So there's another market, but not trending like the NASDAQ. The Russell is trending, and now it's not open yet tonight. It's got the lower highs, lower lows. I would be surprised if it doesn't try to get back over the lower Bollinger Band, but that's all it's doing. And it's also fighting, unlike the other indices, it's under the 100-day average. This is the weak market. This is the weakest of the group. On a big rally, this is where I'd expect to see the pros try to short side if you get out of an oversold condition. In the VIX, now this is 2 days in a row where you're over the upper Bollinger Band. You're overbought. The odds favor you're going to pull back into the Bollinger Band soon, but you've laid a bottom in this market. Ideally, what you'd like to see, if you're looking for volatility and other things to occur, is the 18-day average get over the 100 in a bullish crossover. It's not there yet. This is also the first move over the 100-day average in a while, and it doesn't have to just come back right away. It has a tendency when it gets over it to stay over it for a bit, and you saw that back here. That could easily be the case right now given all the uncertainties we're seeing. The bond market paid attention to the upper Bollinger Band. For those of you that get my morning videos, I was pointing so much of this out today. And bing, you hit it, and I said, watch out, that market's probably not going to be able to stay over it at this point. That's a pretty big, broad range. You're in an uptrend. You have upside bias, but you're overbought as can be. 10-year note got up to and over the upper Bollinger Band again, and then fell back and still falling back in an overbought condition. Now we get to the dollar index, which today, if you look at today's high at 97.97, it does not and did not take out 98.01, yesterday's high. So we came to a market that came down and again got itself back up on the close over the lower Bollinger Band, and now the question is how high does it get? But this market's still in a bearish configuration, but oversold and not trending. You still have that pattern of higher high, lower low. I would look for this rally to kick up a little bit and then give you that lower high with the lower low, but let it get out of the oversold condition, as you've got to get out of the overbought condition in the euro currency, and this did have the big outside day down. So at the very least, what you're seeing is you get over these Bollinger Bands when you've got a market that's already wide. You've got to treat flat patterns one way and the patterns when you're up like that different. And on that basis, I can call this market looking for a bit of a decline here. And like the dollar, you're not trending. You have a lower low and a higher high. And now with this pointing down, I'm actually going to be able to take this arrow, put it over this high. What would turn this market into a running market? Well, what could do that is just taking out the highs of Thursday because you have an outside day down. Will it happen? Don't know, but we'll see what it wants to do. It is overbought, so I wouldn't be surprised to get a correction. At one point today, I saw what's called a mini flash crash happen in the British pound. I swear, in maybe 15 or so seconds, this market must have broke 100 points. I have no idea why. All it did is have an outside day down, go back to its support at the 18-day average where it's holding it. It is still very much in an uptrend with higher lows, higher highs, but I don't like that it had that outside day down. What I do like is this narrowness that's happening in the Bollinger Band, because the narrower it gets, it's like winding in a pipe. It'll set up a trend that we can eventually look at. Where do you think the Japanese yen failed? Let me just show you. This is where the market was on Wednesday. So when looking at the market, you got to zoom here in terms of momentum. You got higher lows, higher highs. You're over the 18-day average in the 100. The only resistance I have on this particular chart left is the upper Bollinger Band. Market makes its run today, hits 90.82. The Bollinger Band is 90.77. Finishes lower, and this is where you're at tonight. All that I can say is the market hit its upside target. Now, something else is happening. You're getting convergence between the 18 and 100-day average of closes, so this will act temporarily as a nice pivot zone should the market fall down there. I'm not saying it's a buy or a sell there, by the way, because let's assume you bought it. The risk would be, the way that I look at it, under 87.94. That's an awful big risk. I mean, you're talking $1,200. There's got to be better trades out there than trying to risk that money. And there's no reason to be short because you're over the 18-day average. You got momentum pointing up and the swing line's pointing up. So I put it together, don't know what to do with it. In crude oil, you've got your uptrend. You got the higher lows, higher highs. It's very difficult to want to be short crude oil when a week from today you have your OPEC meeting. Now, you have to ask yourself some big questions. Is this the buy the rumor of the production cuts, and when they actually come, people say, well, market built them in, it's already priced in, and the market goes the other way. I'll leave that up to you, but it's something you've got to think about. Right now, the trend is up until you take out 48.37. You're in overbought territory at this point, and with these numbers, both are not over 80, so you haven't even begun an embedding scenario. Gasoline, my eye goes right here. You're overbought. Let's take a look at the market coming into today. This was the close of business Wednesday. You have an outside day down. If you're going to get follow through, where might the market go? Well, I always look at that line in the sand. That 18-day average is a possibility. It doesn't have to go there, just a possibility. Market makes a run for it, missed it, in all honesty, by about 30 points, but it accomplished at least the run at it. And right now what you're trying, right now, I hit the wrong button there. Right now what the market's trying to do is just hang here. So what it also doesn't have is a trend. You got a higher high and a lower low in an overbought condition. Don't know what to do with that. And you'll hear me say that a lot. Don't know what to do with it because you don't have a trend. Now, are you going to develop a trend in the nat gas? If it gets hot, I would think so. So I look at this market as a lower low, higher high. Could this be setting up a higher low if the market gets up and over the resistance points of the 100-day average in the 18? Very possible. Let's talk about the downside. If the market's going to fall here, can it set up a downtrend? A flat answer, no. Because even if you take this low out, you still got the higher high, and then you still got the lower lows. Nothing to do there. And you're oversold. Hard market again to try to figure out yet what to do. You can lay your game plans, of course, and set up your thinking, but that's about it. I want to remind you that, you see me talk about this. We have our guides to our technical indicators that really explain everything you see but my swing line. I wrote that indicator. It's not in here. That's one of the babies I created years ago and really like it. But this will help you if you want to learn moving averages, different oscillators. And we actually have two of these. We have volumes 1 and 2, so Fibonacci, Gann numbers, speed lines, everything you can imagine. How do you get these? Because they're PDFs. Just give my staff a call, 866-973-2077. You can also go to our website at www.iraepstein.com. You can click up here click on the icon for YouTube, or under us you'll hear often me say that under us on many websites it says click here for Ira's free offers. One other thing, I still don't have back the ETFs, and it's not our fault. We're waiting on Yahoo Finance to fix the API so we can get the data from them. I'm Ira Epstein. Thanks for your time, and I will talk to you all later.